It's been 5 years since the U.S. housing bubble burst, the trigger for the 2008 global financial crisis, and the U.S. housing market has remained depressed ever since, with home prices hitting new lows this year. But recent signs of a recovery are causing some analysts to say that 2020 is the year the residential housing market will finally turn a corner. Karina Huber joins us live from New York with more. Karina.
Hi, Michelle. Yes, I spoke to a series of analysts and economists, and they are all saying that there are some data points that are indicating that the U.S. housing market is on the path to recovery. Fannie Mae and Freddie Mac, who back or own about 60% of all U.S. mortgages and had to be bailed out back in 2008 as they faced bankruptcy, both of those companies posted billion-dollar profits in the second quarter and said they would not need any more government bailout funds. So those are some positive signs, and there are many others that indicate that U.S. housing is back on track.
One of the biggest drags on home prices in the U.S. has been a glut of foreclosures, but that glut could be waning. Late payments on mortgages fell to a 3-year low in the April to June period of this year. At the same time, home prices have risen on a month-to-month basis for 2 straight months. Prices have climbed before, but didn't hold. In 2010, the market got a boost by a first-time homebuyer tax credit. Once that credit expired, the market fell again. Experts say this year is different, and we truly are on a path to recovery.
So I think the big delta this time around is there's not a lot of inventory directly in the market. The economy is stronger. We have some positive job growth, and affordability is still great.
Economists like Stephen Blitz agree the worst is probably over, but he doesn't expect housing to turbocharge the U.S. economy like it did in the past, when the value of people's homes skyrocketed, freeing up money to buy other things.
How the overall economy does is how housing's going to do. If you're going to look to say, well, housing is now going to lead growth as it did, before the recession, that would be a stretch.
Nevertheless, experts say it could be a good time to buy. Mortgage rates are low, as are home prices, a rare combination, and the market seems to be stabilizing.
But the problem is, Michelle, that it's still very hard for many to find financing. But experts say if you can find someone to give you a mortgage, you have a stable job and the money to put down as the down payment, then you might want to go for it. But as always with real estate, location is key. Michelle?
Absolutely right, Karina. Location, location, location. Now, even with mortgage rates at about 3.4%, the lowest ever, where are we seeing the housing market really boom? Which cities are really hot right now?
Well, Michelle, of course, the usual suspects, cities that have a lot of people moving in, so New York City, Washington, D.C., and Miami. But according to many that I spoke to, the hottest market right now is Phoenix, Arizona. It even surprised me. Now, we're seeing that 45% of the buyers right now in Phoenix are paying, they're all investors, and they are paying with cash. But keep in mind, this is one of the hardest hit markets during the recession, so it's very natural for there to be a rebound. Michelle?
Thanks very much. Phoenix, Arizona, hot housing market. Thanks for the update, Karina Huber, live for us in New York.